Senior Solutions Agency Call. Joe Johnson and Michael Mahalik, we're going to be your host today. We got a great call lined up for you. I know there's a little bit of background noise. That's Michael. He's traveling from his home office in Atlanta.
Hey, Joe, I'm going to keep it on mute until I talk, so the background noise won't be up, buddy.
Oh, it's okay. I mean, anyway, while you're up, don't stay off for too long, man. You know, every week we try to come up with a inspirational, motivational type of quotes that I had asked Michael. Which was with previous Elliot. So Michael, let me turn it over to you to talk about your quote that you can post today.
Sounds good, Joe. This is a quote that sort of changed my life, and Joe is so instrumental, and it really applies so much to the final expense industry, and that is this: only those who risk going too far can find out how far they can go. And Joe, that is so powerful, not only in final expense, but in entrepreneurship itself as well. You know, Joe, it's not the most talented people that are successful in our business. No, Joe, it's the people who are willing to be bold and humble, who are willing to put it all on the line. We have a saying at Senior Solutions, ladies and gentlemen: if you're not in it to win it, don't even begin it. And in this business, you've got to go all in. You've got to risk it all. You know, Joe, as I talk to agents, I always tell them this right here: you're going to have a problem in our business no matter what. And there's usually one or two problems you're going to have. Problem number one is you're not going to have enough people to see. And problem number two is you're going to have too many people to see. And both those problems have things that come along with them. You know, if you don't have enough people to see, then you're not going to have confidence. And obviously your clients are going to pick up on that. And you're not going to do as much business. But ladies and gentlemen, just the opposite is true when you go too far. When you have too many people to see. Well, in that case, you are going to have confidence. They're going to pick up on it. So you want to have the problem of having too many people to see. You want to go too far. You want to risk having more people to see than too few people to see. Because very rarely is it going to be perfect in this business. Very rarely are you just going to have the right number of leads. So powerful, ladies and gentlemen. God, I always heard this, Joe: God favors the bold and the humble. You need to have faith in the system. You're in this business because you know final expense is one of the number one niches in the insurance business now. Now it's time for you to go all in and believe in the system and know that you're with the best IMO in the country, Senior Solutions, and you got a coach right beside you. So again, everybody, take this to heart. Only those who risk going too far can possibly find out how far they can go, and apply that to your partnership with Senior Solutions. So Joe, I'll turn it back over to you, sir.
All right, man. Thanks, buddy. Very good, man. In other words, you just got to go for it. And don't be fearful of being overwhelmed. In other words, don't be fearful that you're going to have too many clients. A lot of times, you know, businesses are feast or famine. Well, I'd rather be the feasting than the famine. The great thing about what we do, Michael, is that on a weekly basis, we get to control how many clients that we have in our database. We get to control how many prospects that we're going to go out and see. We don't necessarily get to control how many appointments we're going to make, but we at least get to control our prospects because of the various different lead platforms. So you certainly have to take that to its fullest advantage. Well, with that, guys, we are going to move into the today's topic, which, if you saw the text that went out, we're going to be revisiting the Term Life Express product. It's better than ever, as they say. They've made some improvements to the term, at least one major improvement to the Term Life Express. Here's what I'll tell you. I mean, I'm a big fan of Term Life Express. I'm a big fan of Mutual of Omaha. When I first got into the insurance business back in 2009, when I was a youngster, this was probably the first carrier I want to say I got contracted with. And I was primarily, my first year in the business, I was primarily focused on mortgage protection. And that Term Life Express, man, I mean, Michael, it was the go-to. You know, and I still have a lot of clients, you know, still on the books today from back in 2009. So it's a great product. They've made a few changes to it over the years, but for the most part, it's the same product since inception. And at the end of the day, it's a simplified issue term product, and it's got, which we're going to kind of do I'd say pretty much a full review of the product. We're not going to get into the application and underwriting. We'll save that for a different day, but this is more about just an overview of the product and the big announcement that they're making. As far as the sales reps go, Mutual of Omaha is broken up into territories. If you're viewing this on the webinar, you can see the different states, the different regions, how they were broken up. Michael and I, we're really good friends with Jessica Helms. That's who we deal with. That's our rep for Senior Solutions. So if you need some help with something, and if you need to talk to a representative with Mutual of Omaha, my recommendation would be reach out to Jessica. She's wonderful. She'll get you everything that you need. Now, this is the point in time in the call where I'm going to ask you to subscribe to the channel, give it a thumbs up, hit the notification bell. Yes, I know you're on this live right now, but we are going to get this recorded. It is going to go on our YouTube channel. So, maybe you're watching this as a replay, and maybe this is maybe you're just checking out Senior Solutions for the first time. Definitely subscribe to the channel. It's going to help you. It's going to help us. The more subscribers that we get, the more views we get, the better known that we get. Our content gets shared more. Hit the notification bell. Give us a thumbs up. If you would like to leave some comments, that would be great. We always appreciate positive and negative feedback on our videos. And also, if you're interested in contracting, or if you need some help with training, whether it be final expense training, product training, you can see my phone number in the lower left-hand corner. Shoot me a text or give me a call. That's my personal number. So you can certainly get a hold of me. All right. As far as the lineup goes with Mutual of Omaha, this is the complete lineup of their simplified issue products. They have 5 of them. It's the Children's Whole Life, that's really our go-to when we come across anybody that has young children under the age of 18. So they can be, because 18 is the cutoff, they can be 17 and 364 days old. As long as they haven't had that 18th birthday, you can fit them into this program. Very easy underwriting. There's only 3 health questions. They don't run an MIB or a prescription check. There's even no Social Security required. So it's great when you're doing your final expense and you're in the home with the senior, and they are interested in getting insurance on their grandchildren, but they don't know Social Security number, and they don't want to go through the hassle of having to get the parents to sign off. The grandparents can totally sign off on this product, and all we need is a date of birth. We don't even need a Social Security. The other great thing is that the kids can live out of state. As long as the owner of the policy, is in the state that you're writing it, the grandkids, you may be in, South Carolina, and the grandkids are in California. You can write this product. So it's very good there. IUL Express, which came out a few years ago, probably my favorite product now with Mutual of Omaha. Extremely competitive. The interest rate factors are good. They have got a couple different credit strategies. It's a fantastic product. I would definitely recommend getting familiar with that product. Term Life Express, obviously, that is their flagship simplified issue term product. And then Living Promise, which of course is the final expense product. That's, in fact, Living Promise is Mutual of Omaha's #1 selling simplified issue product. It's one of our go-tos. We really love the product. They do a great job. Just FYI on that product, just kind of if you didn't know, their graded product, if you have that client that doesn't mind a 2-year wait, maybe they've got some issues. I tell you one in particular, Michael, and this is where I get a client that has, here's what I've come across. They have COPD and they're a smoker, okay? So typically with if they just have COPD, you can typically go with Transamerica, CVS, Aetna. There's a couple in there that will allow for COPD where they can still get same day coverage. Okay. The problem is when you add in they would be standard. The problem is when you add standard and with smoking, it really jacks the rate up. What's surprising is that if you put them with Mutual of Omaha, typically the rate is actually lower. The only thing is that the client would have to be okay with a 2-year graded death benefit. And the reason why is because with the graded product with Mutual of Omaha, it's not rated up for tobacco use, because so they can be a smoker and it does not get rated up. So kind of a little niche there. And then the last product that they have, which is a great product, is their guaranteed issue accidental policy. Now, the only thing with this is you do need a health license in order to sell this. But this is a great add-on, even for if you're selling Term Life Express, IUL Express, or even with the Living Promise with your younger clients. If they're in their 50s or 60s, this is a great add-on where you can, let's say you sell them, $10,000 or $15,000 of Living Promise, man, you can tack on an extra 50,000 of accidental on there, and it is issue ages up until age 70, and I believe I'd have to double check. I'm not sure what the expiration date is on that. Maybe age 80 is when it would terminate. It's basically a term policy. I know we didn't mean to go into that, but for the younger ages 50 and below, this is a great add-on as well, because there's a return of premium feature available on the accidental as well. I just thought of that. So here are the instant decision products that are available from Mutual of Omaha. It's another great thing too. Not only the simplified issue, you're able to get an instant decision on these products as well. Now, as far as the Term Life Express issue ages, this is a big improvement. It's down to age 18 all the way up to age 70, okay, which is huge. So you could literally, have that client who's, 65 years old, they're in good health, and they're looking for a term product. You could sell them this product and still be able to get them qualified depending upon their health. Now, here are the term periods. Well, here are the face amounts. If you can see my cursor, if they're between the ages of 18 and 50, that's where you can go all the way up to 300,000 without a physical exam, simplified issue. Up to age 60, they can get 250. Age 70, they can get as much as $150,000. Now, if they are between 65, if they're 70 years old, you're only going to be able to get a 15-year term, which would take them to 85. And just as an example, if you're 60, you can get a term as high as, you can do a 20-year term, which would take you to 80. And if you're 50, that's the last year, that's where you can get, last year you can get a 30-year term. So still take you all the way to age 50. And also, we're going to get into it in just a minute, the return of premium feature, age 50 is the last year you can get that. So anywhere between ages 18 to age 50, you can get that return of premium feature. So those are the issue ages. All right, your cost riders. These are riders that you have to pay for. There is a disability income rider, which is great if you're writing this for let's say a mortgage protection or just a regular term product. The only thing is with the disability income rider, just a couple of things. One is that just remember that it cannot be combined with the return of premium. So if you're pitching a client on the product and you're pitching hard on the ROP, how awesome it is, don't make the mistake of offering a DI rider, because then you're going to find out that they're not compatible with each other, may cost you a sell. Also, there's a disability waiver of premium. So if your client were, this is a very inexpensive rider, if they were to become disabled, it will waive their premiums indefinitely for as long as they're on disability. There's an accidental death benefit, which doubles the death benefit if they were to die due to an accident. And there's also a dependent child rider as well, where you can add a child term product onto it as well. So those are the riders that you have to pay for. Now, the big news is the big change that everyone's excited about is that the ROP, the return of premium, now offers the living benefits. Before, and I think this just started in effective February 1st, so just a month ago. Before, anytime you wrote somebody with the ROP feature, they didn't get the chronic or critical illness. They still got the terminal illness, but not the living benefits rider. So they got everything worked out. So now going forward, anytime you write a client with the Term Life Express with ROP, those clients are going to enjoy all the free benefits. And these are free riders. They're included in the policy, but the living benefit riders. So here's what they are. Term Life Express, no cost benefits. You got the living benefit riders, or the terminal illness, the chronic, and the critical illness. Also includes the residential damage waiver of premiums. What that means is that if your client's house sustains $25,000 or more in damage, maybe it could be a tornado or a house fire, earthquake, flood, whatever, that they can have their premiums waived for up to 6 months. The other thing too is there is a waiver of premium for unemployment rider. Now, you may have to look this up, so don't hold me to this. I believe for the unemployment rider, I believe you need to be in the policy, it's at least a year, maybe even 2 years. You have to have the policy for at least 2 years. In other words, you can't take the policy out 6 months later, you get laid off and your premiums are waived. So you have to be into the policy for a certain period of time. But if your client were to lose their job and they were eligible to receive state or federal unemployment, then they would be eligible for that. If they're self-employed, as an example, they wouldn't be eligible because they're not going to be eligible for unemployment. They have to be eligible for receiving unemployment. In other words, if they got fired for some reason and they weren't eligible for unemployment, they can't claim it. The other thing that's no cost is the common carrier. So if they were to die where they are a fare paying passenger, like a train, plane, bus, ferry, whatever, anything they actually paid a ticket for, and they pass away, obviously it's going to be an accidental death. It would automatically pay double. And if they had the accidental rider, it would actually pay triple. So it would pay the face amount, the accidental, and the common carrier. But that is a no cost rider to them. Now, for the non-ROP, so for the regular, the terminal illness, if your clients have a life expectancy of less than 12 months, they're able to accelerate a portion of the death benefit and actually get those funds before they pass away. They can use that money for anything they want. If they want to take if they're well enough, they can take a trip around the world, they can do that. Maybe they want to take the money, maybe there's some experimental treatment that they want to do, and it costs $100,000. They could do that. If they want to use it to, pay for their funeral expenses, if they want to gift it to their grandchildren, they're entitled to that. The chronic illness, here's the definition of chronic illness. Insured is unable to perform only two of the 6 activities of daily living, the ADLs, for 90 consecutive days as certified by their physician, or require substantial supervision due to severe cognitive impairment. So maybe they were in an accident and they have severe brain damage, and they have severe cognitive impairment, or they can't perform those activities of daily living, at least 2, eating, bathing, dressing, toiletries, that sort of thing. 90 consecutive days, they're able to accelerate a portion of the death benefit and actually get money to help with care. Critical illness, insured has to be certified by a physician as having one or more of the following conditions within the past 12 months. ALS, which is, you guys know, is Lou Gehrig's disease, major organ failure, heart attack, kidney failure, stroke, AIDS, life-threatening cancer, dementia, including Alzheimer's, aortic aneurysm surgery, or major burns. Those are ones that are considered to be critical illness. The difference between a chronic and a critical is with the critical illness, there's no 90-day exclusion period. In other words, if they were in a fire and got, had major burns, that's a critical illness. They're automatically going to be covered for that. They don't have to wait 90 days. Whereas with the chronic illness, it has to be going on for 90 days. The only major difference between the ROP and the non-ROP, if your client has the ROP, the big major difference between the two is that with the terminal illness is a life expectancy of 24 months or less, which is expanded. I guess you can say that's a little bit better. So they, if the doctor says, you probably have less than 2 years to live, you would be eligible, versus with the non-ROP, you have to have a life expectancy of less than 12 months. So with the ROP, they actually expanded the terminal illness a little bit. And as far as I can tell, you can double check with the carrier, but the chronic and the critical illness, those seem to be the same. I'm not exactly sure. We're not going to get into all the details as far as the percentages and the exclusion periods of the chronic and the critical illness. The big thing about today's call is to let everybody know that the ROP now includes critical and chronic illness. It's kind of a big news. Flexibility with ROP versus reduced paid up. Okay, so you guys probably know ROP. What does that stand for? It stands for return of premium. So the big benefit to the client is, hey, Mr. and Mrs. Client, this is the type of life insurance. It pays if you die, also pays if you live too long. If you outlive your insurance, you're going to get all your money back. It's like getting insurance for free, basically. You're going to get all your money back. The provision is that in order to get 100% of your money back, you have to wait the full 30 years. That's the other thing too with this product, is that it's a 30-year ROP. There's no 15 or 20. So they have to keep the policy 30 years in order to get their full money back. However, if they were to want to surrender the policy early, before the 30 years, they don't lose all their money. It's prorated. And it is based on their age, and you'd have to run an illustration. But according to Mutual of Omaha, on average, this is an average, if the client is in their policy, the 30-year term, if they're in it for at least 12 years and they decide that they want to surrender the policy, they no longer need it for whatever reason, maybe they need some money, is that on average they can get about 50% of their money back on the ROP. So the great thing about this product, it's not an all or nothing. It's not, hey, you got to keep it for 30 years or you don't get anything back. You can still get a substantial portion of your money back, even if you don't keep it for the full 30 years. The other benefit with the Mutual of Omaha ROP is at the end of the term, the client has an option to choose a reduced paid up policy. Basically, it's a term policy paid up to age 100 in lieu of the cash back. And I'm going to give you an example here in just a second. Let me just read this. End of the term, okay, client has two options. Option one is to have all premiums returned and surrender the policy. So again, just keep in mind, the 30-year term, at the end of 30 years, they get a check for whatever, 50 grand. They have no more life insurance, but they have a check for 50,000, and it's tax-free, by the way. The reason why it's tax-free is because it's considered just a refund. They don't have to pay capital gains tax on it. The other choice is they can receive a reduced paid up amount. Basically, it's a reduced term policy till age 100, which I got a screenshot of this. It's a little bit hard to read, but the example is we've got a male client, age 40, who took out $150,000 of insurance on a 30-year ROP in non-tobacco. As you can see, I'm going to put my cursor right here. Monthly premiums, he's paying $120 a month into the policy, or that's a little bit over $1,300 a year. At the end of the 30 years, the client paid in $43,000. I'm going to do it right here. $43,434. I apologize about this being so faint. So that's 100%. Every penny that they paid in, that's what they could get a check for. What I like about the Mutual of Omaha product is that instead of getting their money back, they could let Mutual of Omaha keep the money if they want to, and they can get a paid up life insurance policy for $76,425. So $76,000 of paid up life insurance. It's a term product. It's not permanent, but it is good until age 100. And the chances of someone reaching age 100 is like less than 1 out of 1,000. So, I mean, it's like less, it's like, I don't know what the percentage is. It's like a tenth of 1%. It's very, very, very low. I know people are living longer, but the amount of people that actually make it to 100 are very, very low. On the downside, the negative part is that if the client were to ask you, well, Joe, what if I live over 100? Unfortunately, they have no more life insurance. It was because it's considered a term policy. They would lose the coverage. So they're betting on the fact that they're not going to beat the odds, and they are going to pass away before 100. The other option, I'm going to give you another option that potentially could be a doable option, and that is that if they let's say this guy age 40, so in 30 years he would be aged 70, and depending on his health, if that person is in reasonable health, instead of converting this to a reduced term policy, they could take the 43,000 and they could put that into an annuity, which would grow, or they could purchase a single premium whole life policy, not through Mutual of Omaha, but through a different carrier. And they could probably get, I'm guessing, close to 70 grand of paid up whole life. The difference would be is that it would be a whole life policy that could potentially grow. But the great thing about it is that even though it may be a few bucks less, I'd have to run the numbers. The thing about it, and it would also depend upon their health, but the great thing is it doesn't matter how long they live. If they live to be 105, 120, that policy, it's in no risk of changing if they were to convert that. So didn't mean to go into a big rabbit hole on that, but those are the options that you have at the end of the ROP. Take the money or convert it into a paid up term policy, good until age 100. I'm hoping I'm explaining that properly. So this just talks about the full or partial conversion. The other great thing about the Term Life Express that, and I have sold this to clients that were, I would say, more kind of like final expense clients, but they were looking for a bigger amount. The great thing about the Term Life Express is that it is fully convertible up until age 70. So what that means is what convertible means is that this is a term product. they can convert this policy into one of Mutual of Omaha's permanent policy, either the IUL Express or they have a whole life conversion product. It's not the Term Life Express, it's different. Mutual of Omaha has their own kind of internal whole life product that is designed specifically for conversions. You can't sell it as a standalone product. It's strictly there just for conversions. Now, once you've been doing this for a while, what you can do is that you can actually go back to your older clients that you sold term life insurance to and get them to convert it. And you actually get paid a commission on it. As long as they've had the product, as long as they've been in the term product for at least 3 years, if you can see the breakdown here, between 3 to 5 years, you can receive a 50% conversion, meaning whatever your percentage is on this product. If they've had it for more than 5 years, so 6 years and up, you're entitled to 100%. So if you were to go back and call your old clients that you sold, 6-7 years ago, Term Life Express, and get them to convert that into an IUL Express or the whole life product, it's like selling a new policy. You're going to get a brand new commission on it. The other thing too, when you're selling the Term Life Express product, kind of the selling feature, one is that it is renewable. So it's convertible to age 70, but it's also renewable. I want to say, I should have looked this up. It's either 95 or 100 that it's convertible. So even though, let's say you've got the 50-year-old or the 60-year-old that does a 20-year term, it's going to expire at 80. They may say, well, what happens after age 80? Well, great thing about this product, Mr. and Mrs. Client, it is renewable. So the rates are going to go up, but you can keep the product for longer than that. So just another selling feature on the Term Life Express. As far as your mortgage needs, if you're selling this for mortgage protection, the thing about the Term Life Express is that you don't have to have a mortgage to sell it. You can sell this to an 18-year-old, just going to college, or, a young professional. You don't need a mortgage. But the great thing about if you're selling it for someone that has a mortgage, as far as protecting the home, provides the death benefit to pay off the house, family protection, it provides a death benefit for a certain term, health surprises. You've got the living benefits, which include the chronic and the critical illness. Save up for future. If you do the regular non-ROP, it's going to provide that client with lower premiums. That's going to free them up to put money. Maybe they can put extra money into an IRA or their 401k. If they do the ROP, it's a built-in savings that they're going to get that lump sum cash out at the end of the 30 years. And also the IUL Express also features similar benefits as well. Retirement comfortably. The non-ROP is going to provide the client with low cost of premiums. The ROP is going to provide them that cash, which can help supplement their retirement. And if they do an IUL, you can see they can use that to build up cash value, which they can use for tax-free distributions. And then, of course, guaranteed protection. With the Term Life Express, they have the duration of the term. And for the ROP, they have the duration of the term up. And then they also have the conversion to be able to have protection up until age 100 in lieu of the ROP. And with the IUL Express has a minimum 20-year guarantee. That's only if you do the minimum. If you do the easy solve, that should give the clients protection until age 100 or even 120. And then conversion beyond the term. The ROP, the non-ROP, does have a conversion option. So up until age 70, like we talked about, they can convert that into a permanent coverage. And then with the ROP, It has the reduced paid up until age 100. And then the IUL Express coverage can be extended to age 120, cost of effective premiums. So in other words, what they're saying with the Term Life Express, with the IUL Express, for some reason, if your client has only been making the minimum premium payments and they underfunded it and it's due to expire or lapse, simply all I have to do is put more, they could put in the extra premiums in order to keep that going. That's the great benefit about an IUL, is just the flexibility of premiums, that you can put more money into it, you can put less money into it. So it's really a great product. All right, I'm just going to do a quick comparison. IUL, we're going to do the IUL Easy Solve versus the 30-year Term Life Express with return of premium. So let's just focus on the bottom one. I'm not going to go through these, 7 different illustrations. Let's just talk about a male, age 50. So it's the bottom line. Follow my cursor on this. If you have a male, age 50, taking out $100,000 of Term Life Express with the return of premium, they would have the premiums monthly would be $176.71 per month. And then at the end of the 30-year, age 80, that would be eligible for the cash out option. So they could take a reduced paid up of $87,000, or they could take the cash of $63,000. And let's say at age 80, they already made it to age 80. Let's say they just want the $63,000, take that and, use it to supplement the retirement, go on an awesome trip, tax-free, whatever they want to use it for. Okay. Now let's compare that to the IUL. So if you take a look at the IUL now, and we're talking about not the minimum, but the Easy Solve. And again, the Easy Solve, that premium is designed to have enough cash value to keep that policy to age 100 or plus. The thing about it is, what I want you to notice is that for the same face amount, for a 50-year-old to get an IUL, and again, I want to emphasize, we're not max funding it. We're really just kind of putting in like target premium. Look how much lower the premiums are. An IUL Express is only, the target premium, or Easy Solve premium, I should say, is only $134 a month. So that's a pretty big difference between, was that like 40 bucks a month difference in premium. If you look at it for the 30 years, the IUL it's a difference of $15,000 savings less in premiums. The other thing I want you to look at is at the end of 30 years is that it should have, based on the current illustrated rates of 5.87%, at the end of 30 years, it should have $51,000 of cash value, which would be available for tax-free distributions. The biggest difference between the IUL and the Term Life Express is that even though the IUL has less cash value, keep in mind, this client also put in $15,000 less in premiums as well. The other thing with the IUL Express is that the client could start taking tax-free distributions as a monthly income from that $51,000. And the benefit is that they don't lose, they still have $100,000 of life insurance. They're not losing their coverage. With the ROP, the guy takes the $61,000, he's got the cash, but he has no more life insurance. That's the huge benefit of selling the IUL Express as an example over maybe a term product. Now I know this this webinar is going over the features of the ROP and the improvement, which is awesome. but I can't help just to emphasize how awesome the IUL Express is. Like I said, it is one of my favorite products. I typically sell if someone's looking for, a term product, I probably will sell the IUL Express over a regular term product. And I can, one-on-one, I can show you how to do this. All right, for more information, if you want to get more information about the simplified issue and you don't want to log in, maybe you're not contracted, this is open to the public. If you just go to mutualofomaha.com/simple, it will take you to their website and you can get information, and there's no login required. The other thing I just want to mention too is Winflex Web. If you want to run, if you're selling an IUL Express, it's going to be required to be able to run a full illustration. So you need to make sure, get registered with Winflex Web so you can do that. One other side note, and I forgot to mention this, is with the non-ROP, Term Life Express non-ROP, if you have that client that is interested in receiving the disability income, last time I checked, you're not able to run that from the mobile quoting tool. It does not give you that as an option as a rider. It gives the other riders, but not that one. You need to log in. If you want to do a Term Life Express quote illustration showing the disability income, you need to do it off of Winflex. And we are narrowing down the end. iGo eApp, if you to do the e-application, this is where you're going to go to do it. I highly recommend using the Mutual of Omaha e-application. It's so simple. They got it down to a science. You get an instant decision at the end of it. And that's really it. Hopefully, okay, well, good. I got through everything I wanted to get through in the right amount of time. We're not even taking up a full hour. Let me just see if I have any questions. And then Michael, let's see, are you still on?
I am here, my friend.
Okay, all right. So is there anything that you that you feel like you need to add that maybe I missed out on?
Joe, you did such a thorough job. I think you covered all the bases. Just, the biggest thing is the Mutual of Omaha brand recognition. It's always probably been the number one final expense product as well as term life product, IUL product in the country. And it's simply because of that brand recognition. Your clients will know the Mutual of Omaha name as soon as you mention it to them, and it'll give you instant validity. And that's why it's such a powerful product.
Yeah, you're right about that, man. They have about, I don't know what it is, but it's in the high 90s.
It is.
Name recognition, especially with anybody over the age of 50. With these younger kids, now that Mutual of Omaha Wild Kingdom is not on Sunday nights like it used to be when we were a kid growing up, the younger generation maybe doesn't know who they are as much, but certainly the older generation. Let's just see if we have any questions. Any questions? No questions from anybody. All right, guys. Well, thanks for being on the call. If you need help this weekend, certainly feel free to reach out. You know how to reach me, but appreciate everybody taking the time to be on the call today. And I hope this training on the Mutual of Omaha Term Life Express, I hope it was helpful. All right, everybody. God bless. Take care. Thanks, Michael.
Thanks, Joe. God bless everybody.
All right, my man. Take care.